seatbelts because buzz driving is drunk driving. A message from the National Highway Traffic Safety Administration and the Ad Council.
The Drive with JD. Back Monday afternoon at 5 on News Radio 1000 KTOK.
Is that on?
The following program does not necessarily reflect the opinions and viewpoints of the staff and management of this station.
Lawyers, guns, and money.
Hey, welcome to Your IRS Weapon. I am Your IRS Weapon, Travis Watkins, and I'm joined by CPA Kyle Johnson, and we are bringing you a live question and answer tax show concerning IRS news and strategies to solve your tax problems. You can reach us here at News Radio 1000 KTOK at 840-1000. We're taking calls right now. And let's jump right into this deal today. We're talking about IRS levies. Those are garnishments in layman's terms, I guess. Involuntary takings. And if you are suffering from an IRS levy right now, you've got to take action. And if you're hurting from one of these, please give us a call, 840-1000, because we want to help you out. These things can be devastating. They're very tough. They are the IRS's big opportunity to get your attention when you owe them some money. Kyle, good to see you today. We had some Thunder trades also, didn't we?
Yeah, we did. Very exciting.
Yeah.
And they played good last night.
Looked
yeah,
pretty good, too.
Absolutely.
Yeah.
I think Russell likes his new teammates.
I think you're right.
I think so.
Yeah.
So what is a tax levy?
Tax levy is, like I mentioned, an involuntary taking of your money, either by bank or by wage. I consider it to be the active collection arm of IRS, things that they can do to you as opposed to things that just hang out there, say, on your credit or against your property.
So this is kind of like, have you seen the Pursuit of Happiness where Will Smith calls the bank and they've taken all of his money?
That's totally what a IRS levy is. That's a great one. That's something from pop culture that we're familiar with there. Yeah, you're coasting along just fine. You kind of know in the back of your mind that there's something that you owe the IRS, but hey, they haven't been doing anything lately.
Yeah.
So,
pretty good. You know,
yeah, we're all good.
In the bank
Things are starting to look better.
Yeah.
And then boom.
Yep.
All of a sudden you're toasting along, and the IRS has just involuntarily removed your whole bank account up into the point of what you owe, and if there's not enough there, well, they'll take it all on a bank levy.
It's devastating.
Totally devastating. Yeah, but that's a good one. That's exactly what happened. He was hanging out. Things were starting to look up for him, and he begged and pleaded with the bank, which, by the way, that does you no good.
No good.
The banks have their arms tied behind their back, too.
Well, under federal law.
Right.
Okay.
Or, if they don't send the money along, then they get in trouble. They don't like that.
Okay. So how is that different than a lien, a tax lien?
Yeah, tax lien and tax levy are they kind of sound alike even, and they're kind of confused oftentimes with one another. A tax lien is an involuntary, well, it's a passive form of collection with the IRS, I would say. It hangs out there on your property. If you own your own home, it will just sit there essentially. They can foreclose on those tax liens.
Oh, they can.
Including
okay.
your homestead. They're not bound by homestead laws of the state of Oklahoma or any other state. They can come after the home and they can foreclose on it. It's called an IRS seizure when they do that.
Okay. And the only creditor that can do that?
Yeah, they're the super creditor. They don't have to obtain a court judgment in order to do that. Your run-of-the-mill creditor can go out and get a judgment and then foreclose against the property after they've jumped through a few procedural hoops. But most of them are going to be subject to that state homestead exemption law up to some amount of the property's worth.
Okay.
So that doesn't happen a whole lot either. But yeah, the IRS doesn't have to jump through any any court hoops as far as slapping that lien on there. They just declare this amount due and owing, and they just go put it right on there. To foreclose, they would have to go to the U.S. Attorney's office, the Department of Justice office, in order to foreclose on that lien like any other creditor, but they're not bound otherwise by the homestead exemption laws. Now, tax levy, on the other hand, the other side of the coin, that also doesn't have to have any type of a court to bless that transaction either. They just come in after giving you some notice and start taking.
Yeah, that's the really troubling aspect of this, is that the IRS in no way has to substantiate what they say that you owe them. It's up to you to substantiate that you don't owe them that.
Right.
It's very unique as far as creditors are concerned.
Yeah. Well, I mean, and there's also, I don't want to get too hyper technical about this thing, because I think everybody gets the point. The IRS is powerful, and they can do what
Absolutely.
they need to do to collect these things. But in all, if we break this down to a legal matter, it's even worse than that. All the IRS has to do, they have to have an assessment. In other words, you filed a return or they filed one for you. They have to give you a notice, and court cases have said even just calling into the IRS and saying, how much do I owe, and them giving you the amount is notice that you should pay. They have to give you 10 days to pay, and at that point a fictional, I call it a secret lien, arises over any property that you have, both at the time of that lien coming down, or the debt being owed, and into perpetuity until it gets paid.
Wow.
So, and they don't have to file that of public record, and it becomes important when you transfer property and things like that. They say, well, there was no lien out there for the world to see that there was a tax problem, and they say, yeah, but we actually have the right to that property because it was possessed, either actually possessed, or they had some sort of control over it that they should have told the person that got the property transfer, and the IRS can back out those transactions.
Even in an arm's length transaction?
Well, I mean, it becomes a gray area there as to what this person, the buyer or the transferee knew or should have known at that point. But yeah, I mean, technically there's nothing that fools with the arm's length buyer in due course type of deal, where if you go check the courthouse and there's no liens, you're probably good on those things. But the IRS, as I said, they have this whole card where they can make your life difficult and the lives difficult of those who you transfer property to, because of their right to property when you owe the government taxes.
Okay, so are there different kinds of levies?
There are different kinds of levies. There is the bank levy. That's the Will Smith Pursuit of Happiness levy, where you're coasting along and all of a sudden, boom, they drain your bank account.
Okay.
That's the bank levy. The bank has 21 days to hold those funds. They have to hold the funds for 21 days. They can freeze your bank account. You can still use your bank account over and above what was frozen on the day of that they received notice of the levy. They have to hold that though, and if they receive a release from the IRS, then you're good to go. If they don't, their hands are tied, as we mentioned, and they got to send it on. That's the bank levy.
Okay.
There's also wage levies, and wage levies are nasty too. They get into your check that you're working for, your pay, and they are usually continuing. And it's a devastating situation there, because they're very, very difficult to get off once they get on with a wage levy.
Okay.
All right, looks like we've got a caller here. We got Billy on the line from Norman. Hey, Billy, it's your IRS weapon.
Hey, Travis. This is Bill. I called a couple weeks ago about the passports. I don't know
Oh, yeah.
if you remember that.
I do remember that.
Yeah.
You getting anything done on that?
No, I haven't called your office yet. I'm a bit of a procrastinator, but I'll be doing that for sure on Monday.
Yeah, give us a call, 607-1192. What's going on? Still messing with the passport stuff?
Well, now the company that I was contracted with last year issued me a 1099 that's nowhere near what I actually made last year. It's way overstated.
Okay.
And so I'm just wondering, is there anything I can do about that? Can I challenge that at all?
Yeah. For those of us listening on Facebook Live, we've got Billy from Norman, and he's asking if he's received a 1099 from a company that he's been working for, and it's, correct me if I'm wrong here, Billy, it's greatly misstated.
Yes.
There's more on his 1099 than that company actually paid him. And so the question becomes, what do you do about that? Do you challenge it? How do you challenge it, right?
Yeah, exactly.
Yeah, this is tough too, because if you play out this hand here, the IRS is presuming that everything is working right there on businesses that and people that pay others, that they're reporting the correct amount that's actually that they actually paid, because they're taking that as a deduction on their own taxes, the company's taxes. So when one of these things comes down and it's incorrect, of course, I think the best thing to do is get on the horn immediately with this business and just tell them, look, hey, what's going on here? Did you guys make a mistake? Because it could be just a simple mistake that they've made. They may have hit an extra zero on there.
Exactly.
Have you given them a call at this point, Billy?
I have, and the accounting department, they didn't want anything to do with it. They said that it was correct, and I was trying to tell them that it was nowhere near what I was actually paid, but they just kind of dismissed me.
Yeah, that happens. Billy's saying that he did contact him, and they're not really playing ball here, and that's a bad deal. Here's I've had these before, and the best thing to do is to go ahead and write them a letter, use the certified mail, so that you have a record for this. You're building a record at this point for the IRS, because this can be really bad if you don't report this correctly without an explanation. What they'll do is audit you in some fashion, either with a paper audit, or they could send out a field auditor and crank up the full audit machinery there on you. Hey, Billy, we've got a quick break that we need to take here, but would you please stay on the line here and stick with us here, because this is an important issue for our listeners. And of course, also, please give us a call this week, 607-1192. Hey, we're going to take a quick break, and we'll be back with Billy in just a minute.
It's perhaps the most pivotal part of a new president's term.
Let me tell you about my plan.
When campaign promises are
That's a great question.
watching.
Okay.
American dream is coming back.
Really good
President
question.
Trump's
Yeah.
first 100 days.
It begins with
Yeah,
having
there's a way you can treat it on your
we
tax
need to
return.
expect
Okay.
that of our president
Yeah,
and Congress
I'll
in
go
general.
through
Hear about them, talk about them.
kind of parade of
Here,
horribles
News
for
Radio
another
1000,
minute or two.
KTOK.
It's your IRS weapon, Travis Watkins, and if you
You'll
have an
kinda do
IRS
it
problem now, or you never want one,
That's
we
what
need to
I would-
talk
I would do
about
is I would do it in
action.
a
Fast
substantiated
forward with me for a
statement.
moment to the end of
So there's
2017.
where you enter
Looking
that
back
1099,
over the
and
year,
you can
what
do a
has to have
substantiated
happened in
statement
your
and
life, both
subtract the
professionally
error
and
amount
personally,
and
for you to feel
I
happy with
got
your
you.
progress? The
Doesn't
actions
necessarily
you took.
make you high
Did your
risk for
unfiled
audit, then I would
returns get
definitely
filed? Did
be
you
ready
stay
to
safe from IRS
substantiate
levies and
whatever you put
encroachments?
on there.
Are you sleeping better at night?
That's what I would
Did you
do.
settle your old tax
Yeah.
debt? And most importantly, did you get a winning strategy to assure you never get into this mess again?
That means, did you get your quarterlies and withholdings in line so you don't owe again for 16 and beyond? Those
But
are just a
you
few of the
do go
things my
ahead and
team of
on your-
attorneys and tax professionals
your
can do for you in
preferred list
2017.
the
99% of our
amount that
clients
Yes.
never talk to
You
the
list the
IRS
full
at all.
amount,
Call me at 607
put a line in,
1192
say,
for a free tax
reported in
strategy
error.
meeting,
Okay.
or log
And then
on to
that would be the net amount.
taxhelpok.com for
Cool.
more information.
So,
That's
that's not
taxhelpok.com.
Hi, I'm Oklahoma
See,
Coach
that's
Bob Stoops.
Yeah,
With
so really all
approximately
you can do.
900 Oklahomans waiting for a life-saving transplant, I encourage everyone
All right.
to make the important decision to be an organ, eye, and tissue donor. So check your driver's license for the little red heart. If it's not there, visit lifeshareok.org and join the registry today. I have the little red heart. Do you?
That's okay. I can do it.
Hey, welcome back to Your IRS Weapon. We got a little celebrity tax news here, and this one is not so new. It's been lingering around for a while. It's celebrity baseball legend Charlie Hustle Pete Rose. Yeah. Center field, or what was he? Was he third base? First base?
That's a great question. I don't know.
That's pretty. Third base. He's
Before
third
my
base.
time.
Yeah. All right. Well, he's got a checkered past in baseball terms and with the IRS. Of course, he's still not made it into the Hall of Fame, and may never make it into the Hall
That's a
of Fame.
shame.
Yeah.
It really is.
He's just stuck making Febreze commercials or something about it.
And
But
signing autographs all day in Vegas.
yeah, I saw Charlie Hustle in Vegas signing baseballs.
Doing quite well, apparently. Based on
Signing,
this.
signing. Sorry, I bet on baseball.
Exactly.
But he's not apologizing to the IRS, I guess.
No.
He pled guilty to failing to report earnings from horse race winnings, selling autographs, of course, and other sports memorabilia. He was sentenced to 5 months in jail and fined $50,000, ordered by the judge to spend 3 months in a halfway house and complete 1,000 hours of community service. He had, that was back in the 1990 and ongoing there. And then in 2013, is that right? No,
2003.
Yeah, he had another run-in with the IRS and failed to pay taxes, and the IRS hit him with a $154,000 lien. And I'm not sure if that's even been paid, even still.
Maybe they'll be levying his wages.
Yeah, levying his autograph wages.
Absolutely.
Yeah. So yeah, Pete Rose, notorious for controversy and tax problems. Hey, we've been talking to Billy here on the phone, and Billy has an issue. He's working and has been issued a 1099 by, not his employer because he's an independent contractor, but the 1099 is incorrect, and he needs to challenge this thing because if he just lets sleeping dogs lie on this one, and he just goes ahead and reports what he thinks it should be without regard for what this 1099 shows, here in about 45 days, maybe 60 days from when he files, one of two things are very likely to happen. And that is, first of all, I think it's probably, depending on what the discrepancy is, it's more likely than not he'll get some correspondence from the IRS that says, hey, there's a discrepancy, here's what it is, here's what was reported on you, here's what you showed on your return, there's some tax due here, and here's what the amount of it is, and pay it, or agree or disagree. You've got some time to disagree with this thing. In a slightly more oppressive stance, what happens next is he just gets correspondence from the IRS that says, hey, we're going to do a full audit on this year's tax return. And we're going to send a live auditor out, and they'll be contacting you within X amount of time, and they'll be setting up the next meeting with you, and that's never any fun. Either one of these is like a police officer rolling up behind you with the lights on. It takes your breath away a little bit, and you get scared. And let's talk about what, if anything, we can do up front in this thing to keep us from getting into that situation. Kyle, you're the tax preparer, you're the CPA here. You got any ideas on what could be done at this stage of the game?
Well, yeah, and again, you've talked about the preliminary things. The first thing to do is contact that person, the issuer, see if you can get it fixed. If they want no part of that, and Billy, are you still there?
Yeah, I'm here.
Okay, so is this a thing where maybe they've added a zero somewhere, or is this just like they're reporting more income than they paid you, and then that's just it? So not a mistake, they're just trying to push some money to you that they don't feel like paying on. I mean,
You know, the amount is an odd number, so
okay.
I mean, that definitely doesn't sound like just an extra zero.
Okay, sounds good. So the first thing I would do is I would report that 1099 as is. And I would put a substantiating statement in the tax return, less amount reported in error, to make the net how much should have been reported to you. So in other words, you put the 1099 in as is, attach a supporting statement subtracting the amount that was reported in error, and then the net will be what it should have been in the first place.
Is this statement, Kyle, is this an IRS form, or is this something less formal than that?
It's less formal than that. It's just, in any tax return, on almost any line in your tax return, you can attach a supporting statement if you feel like it needs it, to explain what these things are. In some cases, whenever you're doing a business return or even a Schedule C, like this gentleman probably has to do, you can put in a substantiating statement of where that income actually came from. Okay. Say, instead of just saying this is how much money I made, you can say I made this much from rental, this much from, well, that's a bad example because it's a different kind of income, but report where it actually came from. So you can definitely do that. That's what I would do if somebody came in and wanted me to prepare this tax return. And then just see how it shakes out. The IRS could audit you for that. I wouldn't say it necessarily opens you up to an audit any more than a Schedule C does itself anyway.
Right.
Just because of the things you're writing off against that 1099. So that's where I would go with it.
Do you have a lot of things to write off there, Billy? I mean, as far as business expenses and things?
Not really, but there are a few things that I take against that income.
Okay, do you get reimbursed? Like, do you get a per diem? Do they pay for your travel? Do they pay for your mileage? That's the thing that I'm thinking this might be, is that they're including that in your 1099, whereas that should have been non-tax income. So I'm just wondering where this possibly could have came from. It's a very unusual situation, I would say.
Yeah, it doesn't happen a lot.
Not for a business to push income onto you that they didn't pay you. That's a fairly bold move.
Yeah. Yeah. Well, what do you think about, I mean, obviously you don't want to put so much into this return that it's going to foul up the processing of it.
Absolutely.
Too, because I've seen situations where people taxpayers will put in more documentation than just the plain forms and schedules in this thing, and you know those things may end up in the round file at the end.
Absolutely, like, hey, where'd this come from?
Right.
You know.
Right.
Whereas if you just reported it, and or maybe they wouldn't. Maybe they felt like you needed to explain yourself. Well, why did you feel like you needed to explain yourself?
Yeah.
Yeah.
And weighing this also with the fact that worst case scenario, I think the IRS does come back with a paper audit and says, explain yourself, which you'll get, at that point you get a second bite at the apple, really, to explain yourself.
In this case, you probably want to explain yourself. You definitely do.
You definitely do.
Like, I did not get this income from these people. So, you know,
Yeah.
Which, again, bold move on their part, because that's going to open them up to some correspondence with the IRS.
Right.
100%.
I still stick by to going ahead, even though you've had the conversation, Billy, with them, to go ahead and back it up with a simple letter saying that you disagree and that you'd like to have a meeting with them or have them produce to you documentation backing up where this number comes from, because it isn't jiving with what your bank accounts show, what your paychecks show in what you got paid from the IRS. And do that in a certified manner. Nothing counts in this game if there's no backup for it, if there's no certified mail, things like that. That way you can show the IRS that you tried to rectify this situation. The 1099 is wrong, and you shouldn't be taxed on this discrepancy between what your records show and what their records show. Put the burden back onto the company.
Yes, and keep notes of every conversation that you have with them.
Yeah. And come in and talk to us.
Yeah.
Aren't you heading out of the country here pretty soon, if I recall correctly?
Yeah, about 2 weeks now. I'll be heading over to Saudi Arabia.
Yeah.
Yeah, so you need to call on Monday. Like,
Yeah.
2 weeks is,
Yeah.
I don't even know if that's enough time, but you should definitely call on Monday.
607-1192, and we'll get you taken care of, Billy, okay?
All right, I'll be calling on Monday.
All right. Have a good day. Thank you, sir.
All right, thank you.
Yes, sir. All right. Well, we were talking about some IRS levy matters and kind of getting down into it with that before we talked to Billy there. What else do we have on levies, Kyle?
Well, I would like to know, can a person that's on Social Security be levied?
Of course.
Really?
Yes. Well, Social Security, not Social Security disability necessarily.
But regular Social Security?
Yeah.
Okay.
Yeah, supplemental, you're going to, you're fair game for a levy, an involuntary taking from the IRS if you owe taxes. Now, they are capped on SSI. They're capped at 15%.
Okay.
So they can't take more than that from you. And if it's a joint return and that you owe on, and both spouses are drawing Social Security, there's an argument to be made there that that's oppressive, even if it's capped at 15%. In other words, double levy is always a frowned upon issue, but
So
it happens.
In that case, it would be 15% each.
It would be 15% each, yeah. But that needs to get sorted out, because they shouldn't be double levying on spouses like that. So give us a call on that issue as well.
What can you do to get that levy to stop?
To get any levy to stop, you're going to have to convince the IRS that there's a better way in the best interest of the government and the taxpayer to get this thing paid, or that the levy is so burdensome that there shouldn't be any levying going on whatsoever. In other words, that the taxpayer is uncollectible, or that you are in the midst of trying to get an offer in compromise with the IRS, or otherwise work out an installment agreement. That's always the quickest way to get these things released. But the big problem becomes nearly every taxpayer that I come in contact with on a tax liability has at least one unfiled return.
You need to get those filed, for sure.
Yeah.
That's step number one.
But now, if you're in the middle of a tax levy, it's right on top of you, and you've got unfiled returns, you're probably not going to be able to get these returns filed just lickety-split, right?
Yeah, probably not.
Yeah.
So just depending, I mean, everybody's unique, but for the most part, an individual who isn't going to get their taxes done probably doesn't have the documents.
Yeah.
Just generally speaking.
What do you do then?
You sign up with the power of attorney and get your transcripts.
Okay.
That's the only thing you can do at that point, just to see what's been reported to the IRS.
Yeah.
So that would be step number one. And I have another question that I want you to expand on a little bit that's happened with some of my taxpayers is, so you have a debt, an outstanding debt, the IRS takes your tax return.
Right.
Right? We go back, file those years, and you really didn't owe because you had dependents or you had other things that took you out of owing. So you would have gotten a tax return. It's more than 3 years old. You're not going to get it back.
Right.
Okay? But can you get back those funds they took from you that are less than 3 years old?
That are less than 3 years old.
That's it.
You would have
A
otherwise
unique
gotten a
situation.
refund.
Yeah.
Do you get those back? If you have more than 3 years, though, of liabilities, it will get transferred to those.
Okay. Okay.
Yeah.
But say that they've taken a tax return, given you a little bit of it, so those have been satisfied.
Okay.
The past have been satisfied. So at this point, you owe nothing.
Yes.
We're going to file your past taxes. You would have got a refund. I realize those are too old, but can you get the other money back?
Possibly.
Okay.
Possibly.
I
Great
kinda-
lawyer answer, huh?
I kind of feel like the IRS is this coffer that once it goes in, it's not coming out.
Well, that's more like it.
You know what I mean?
That's the reality.
That's how I feel it. I always tell people, maybe, but don't wait by the mailbox.
That's right. That's
So-
right. Hey, thanks for joining us on Your IRS Weapon. We'll see you next week.
Thanks.
Wisconsin